Welcome to another riveting edition of Risk and Return. I'm Charlie Gasparino from Fox Business and the New York Post with my partner in crime, the granddaddy of data, the man of the hour, Bob Sloan. We're coming off a little bit of a high from last week, Bob. We had the great CZ from Binance on, and we got some good numbers. CZ, we should point out, is one of the I guess you could say he's one of the founding fathers of crypto. I mean,
for sure.
Satoshi, whoever he is,
Nakamoto's
on the Mount Everest, but right near him has got to be CZ. Changpeng Zhao, also known as CZ, the former CEO of Binance. And, we went through everything, his contretemps with the government. He spent 4 months in jail over, I don't know, a foot fault, as they would say in tennis, right? One violation of the Bank Secrecy Act, and they stuck him in the can, which is kind of ridiculous. But in any event, that's the Biden administration was making, trying to make, examples out of crypto because it wanted to end it didn't want crypto, competing with the dollar. Trump has taken an obviously different approach. He did pardon CZ, something I broke on in the New York Post and on Fox Business. We had him on. What I found about him, and I think this is why the interview worked, is that he answered every question, didn't run away from one thing, explained himself. I don't know. He's a mensch. I know he's from China, but he's a mensch.
A mensch. You can be a mensch.
That's true. I shouldn't say that. But I don't know. How do you say mensch in Chinese? I don't know.
Good question.
How do you say the Japanese? Because you could do that.
I would say iotoko.
Iotoko. Okay.
Good person.
Good person.
Good
Yes.
person, good man. I think, what struck me was just he had made peace with a lot of what happened.
Yeah, he wasn't dripping with. I've seen guys that have gone to jail for insider trading, which they think they weren't guilty of. I mean, to this day, they are oozing with contempt for the federal government, and
None of that.
none of that.
And we got a lot of really interesting, good tidbits around market structure, how he thinks crypto is going to evolve. It's just a great interview. It was very informative. He told you, founding father of crypto, this is what I think, and this is where I think the markets are going, and this is how I think things will evolve.
And he didn't think that the New York Times found the real Satoshi Nakamoto. That story, that very long 10,000 word story, which was well reported, but in the end,
Yeah, the wrong guy.
maybe I don't know. It didn't make the sale to me, but he would know better, and he said no.
I think if someone could identify Nakamoto,
Conclusively, we'd all agree.
I think you'd know about it by now.
Yeah.
By now.
Well, CZ's book, Freedom of Money, I did a book review on that, and I know I sold a few copies because people called me and said I'm a buyer. What I liked about him is that he's optimistic about crypto, and here's the point he makes. And I'm not endorsing buying Bitcoin, but Bitcoin goes through these ups and downs. But because it went through that one winter, the downs are not going to be that pronounced anymore. And I think you could see that in its trading recently, kind of hit, bouncing back up a little bit.
Well, that's why we asked the question around, DATs, right? Digital asset treasuries,
Right.
Treasury companies, and they're in the market buying. And I think Saylor was in the market buying last week.
Oh, was it? Interesting.
So he's accumulating more position with a long position, but you got to keep financing it. That's what, if he can raise the money, he'll have the support to keep crypto kind of where it is. There's a support line.
Right. As an investable asset. But what he also made the point
But
is,
if he doesn't, it goes to like 20,000.
Good point. Oh, really?
Sure, because the money is borrowed, it goes back into crypto, it creates support, right?
Do you think Saylor himself can send the market down to 20,000?
Yeah.
Wow. I'd be scared then to buy.
I mean, by himself.
Right.
Certainly be a bellwether.
Interesting. I think one of the other things that I liked about what CZ went for, and by the way, if it hit 20,000, he'd still be a billionaire, CZ. Probably not 100, but maybe 20. Not bad.
It doesn't seem like he
cares much. He doesn't. He's a
doesn't
very
care about
he
that.
kind of lives an aesthetic lifestyle, as they say.
Pushiness of
Yeah, wealth is not his thing.
worth $100 billion is very simple.
Yeah. He also mentioned the blockchain technology advancements in that, and that's really, I think, what we're going to see advanced by banks. That and the tokenization of stocks. He mentioned.
Tokenization of stocks to me was a big one.
Yeah.
The idea that there's so many pockets of liquidity and trading that are not yet to be
And they will be.
explored and tapped, and there's a need for it.
Because it's hard to buy in Hong Kong U.S. stocks, right? Unless it's tokenized through the blockchain.
Well, you got to be able to stay up. To trade it properly, you have to be live during market hours. You can't do things overnight.
Yeah, and then there's the currency stuff and everything.
Tokenization is a way of getting the exposure you want,
right?
Whenever you want.
I know, pretty amazing. Some headlines, Bob, before we get into your stuff, which is why people pay the big bucks to watch us. By the way, actually we're for free, but in any event, I like to say it that way. But
it's worth the money.
It's worth the money, right? Kevin Warsh, I just moved a piece in the New York Post that says Wall Street really thinks that there's been a breakthrough here, that the end the impasse that gets Tom Tillis, the ranking Republican on the banking committee, who's balking at approving Warsh, not because of his qualifications. He thinks he's qualified. He doesn't like the DOJ investigation into Powell. Thinks that he calls it bogus. Donald Trump the president thinks it's necessary because of the cost overruns. He thinks this is the executive branch trying to, meaning Tillis, exert power over an independent agency. But there is a compromise that he threw out there yesterday to reporters about, having the banking committee essentially do the investigation. And if they find something wrong with anything he said, the cost overruns with the Fed building, then refer it to the DOJ. So it goes through proper process.
Yeah.
I hear the White House kind of likes it. Now, Wall Street thinks that's the off-ramp. I think one condition that will have to be is that Powell can't stay as a Fed governor.
Which makes sense.
Yeah. Well, yeah, but he kind of is talking about staying. I mean, who knows? But, he can stay to 2028 as a Fed governor. So that seems to be, my story just ran. We'll see in the next day or so. Sometimes it has a centrifugal force where, you start writing about it, throwing it out there. People start talking about it. White House sees it.
Yeah.
And it starts moving. So there seems to be some movement to getting Warsh in there. Remember, Powell's term ends on May 15th as chair. He will stay as pro tem. Obviously, the White House wants him out. Republicans want him out yesterday. Here's the thing. There's two stories here. Obviously, life's not binary, as we know. You can not like Powell as a Fed chair. And I think the Wall Street Journal and a few other places, I have laid out the case against Powell. It just wasn't a great Fed chair. He cut rates when he shouldn't, maybe raised them when he shouldn't have. Mainly the cutting, using the balance sheet, got into stuff like ESG and DEI and kind of veered from the mandate. And Warsh will bring it back to the mandate, dual mandate of inflation, price stability, and full employment within the context of full employment. He won't veer into these social programs. He believes using the balance sheet, QE, increase the wealth gap. People forgot that. I was fascinated by that. You would think that Elizabeth Warren would be jumping up and patting him on the back and not calling him a sock puppet. People forget that during the Obama years, we had some of the greatest wealth gap divergence between the rich and the poor ever, because when you QE'd, when you added liquidity to the financial system through the purchases of treasury bonds, sending interest rates to rock bottom levels, asset prices exploded. Rich people have asset prices. Working class people, talk to the average working class guy. He's got a 401k of like $100,000, $130,000, not a lot. So he's not making a lot off that. But rich people have financial assets, so they did very well. He wants to end that. So he's obviously a good choice for this job. Will he cut short-term rates? Of course, Trump wants him to. But I think that's kind of besides the point. Short-term rates, when you really inflate the economy, it's when you use the balance sheet. and he's going to have to wean the system off using that balance sheet. Obviously, you can't do it in one day, but these are all good things, and I think Kevin is going to go there.
Well, we've had, the taper tantrum was weaning off the balance sheet. A lot of things that happened during COVID was weaning off the balance sheet. We're like QE number 28.
Yeah, it's kind of scary, isn't it?
The Fed balance sheet went from something like 800 billion. Was it now $6.5–7 trillion?
Yeah,
something like that.
It's scary because the Fed is not elected, and for people out there that kind of trying to get their hands around this, fiscal policy, inflating the economy, generally comes from the executive branch, right? Because you elect the Congress, you elect the president to do certain things. So if you elect them to be socialist, if you elect them to do what Barack Obama wanted, to spend money and, all for it. And then if it doesn't work, they get thrown out of office. And that's what happens. But if the Fed does it, it's unelected people. Yes, they're appointed, but it's not the same thing. It's unelected people driving fiscal policy, government policy, which should not, the administrative state was not meant to do that. And, it's, Constitution lays out the separation of powers. The Federal Reserve Act of 2013, and when it was amended, I think in 1977, didn't give the Fed vast powers to do extraordinary things for the economy. Didn't, at least explicitly. Now, there was mission creep, but that's not good.
That's a serious thing, right? If you're saying, hey, I want to take down the balance sheet of the Fed and do it over time, less liquidity, right? More pressure on reserves. So I think that's a really big thing for the markets.
We're going to have to digest that. It'll be interesting to see how the markets react. The markets might like it. I mean, who knows? I mean, if you have a fiscal policy that's much more about deregulation, less intrusive, and you have a Fed that's not, essentially letting the economy stand on its own, it might be a net positive. Obviously, that doesn't negate him lowering short-term rates. But
short-term rates not the battle. Right?
It's not the battle.
That's not the battle. The battle's 10-year and how to finance the deficits that are growing and growing and growing.
I know.
And growing.
Well, that's a big battle, getting the economy going. We do have a war, which is kind of off and on and off. You notice how the markets are kind of sleeping through this, or they just keep trading up. They don't care anymore.
I don't know.
What do you think?
I don't know if it's they don't care. I just think take your pick of things that are, threatening your daily life, right? You have a situation in the Middle East, obviously it threatens everybody's daily life, higher gas prices, etc. You have AI threatening your daily life or giving you a fantastic opportunity in your daily life. You have, really for the first time in a really, really, really long time, you have a really strong socialist party in the country.
I know.
That has
the Democratic Party has become socialist. Yeah.
Basically. And it has real voice and it has real appeal, seemingly.
Some places.
Well, but in the places that you would think these things would appeal to, it has appeal.
Yeah.
And
in places that matter, because, California and New York, the capital of entertainment and media.
It's
right.
So you say they're sleepwalking through what's happening. So much of the positioning data that we look at every day is telling you that there's just a lot of passive ETF mechanical money in the marketplace. And there's a lot less float because there's a lot more passive. And you're seeing this slow grind up because I think people can do the math. I think they understand what happened in Iran. They're not stupid. They see that you have the clerics out, the IRGC in, and they see that we basically put up the blockade on the straits, and they're gaming it out. They're saying, well, really, who's going to move us out of there?
Nobody.
And in time so that your currency, which is already down 99%, doesn't go totally out the window for time for food, energy, water, etc. So it's just a question of time, and um, I think our strategy is good that way.
Yep. Trump extended the deadline, I guess, another couple days. So
Our strategy is good that way.
we'll see if they come up with a plan or if the bombs start flying by Friday.
You got to let them cook, right? You're putting a lot of pressure on these folks, and we're not blowing up buildings doing it.
You know, it's interesting you mentioned that, let it cook. So I was on the Drinking Bros podcast. It was one of my favorite podcasts, and we were talking about the economy with Russ Patterson. I listen to these guys all the time, and Ross reminded me of when we captured Osama bin Laden. Right? What did we find on his hard drives? A lot of porn.
Right.
So if you think these guys are just religious zealots that all they do is pray, no, they have carnal desires. They like steaks. They like porn. They like women. They like nice things. You can't get those nice things if the country has a currency that's destroyed and no one's dealing with you. So I just we'll see what happens. We're playing the long game here. One more headline I want to get to before we get into your stuff, Bob, and that's pot. Just so you know, I'm a skeptic of pot until recently, or the weed Inc.
How big is the weed industry
The number I keep seeing is 50 to 70 billion, and it could get
in sales?
yeah, and it could get bigger. The reason why it hasn't gotten bigger because you can't really bank it. Why can't you bank it? Even though you smell pot all over the place in New York, it's not federally legal, right? So if it's not federally legal, no one will. The banks won't get involved. Credit cards can't get. You name it, right? You can't even really transport it across state lines. I was someone gave me gummies, and I was thinking of bringing them to South Carolina, and then I Googled it. And I said, "No, I better not do this. I don't need to eat. I don't need to. What is it? Who would be arresting me? Not ICE, but tobacco firearms at alcohol, tobacco firearms. DEA. Could you imagine if DEA arrests me for gummies? So I didn't do it, even though okay, but in any event, let's just get to the news. Trump is the White House now would be the Justice Department is poised to essentially codify Trump's executive order, taking down pot from a level 1 drug, which means total illegality. It's in the same thing as in the federal government's eyes as heroin, down to 3, which makes it like doctor prescribed Tylenol.
Yeah.
And that could open up this business and in a big way. And so, we'll see. It's the executive order was pretty narrowly written. There might have been some outs, but a lot of it was about medical usage and this and that. And so, who knows how vast the business can expand, whether banks will start banking it for medical uses. I'm sure they bank codeine for medical use. So maybe they can now bank.
Well, Mark Cohodes has been all over this.
He's been on our show. By the way, he is an investor in something called Glass House Brands. I don't do testimonials. Well, I did from one of your drinks that I thought was really good. Celitas, right?
Yeah, I love that stuff.
I'm going to give a mini testimonial to Glass House Brands. Okay, so here's the thing. My wife and I pulled my shoulders because I work out a lot and I'm old, right? My wife has bad TMJ, the jaw thing where your jaw tense up. Mark got me some of the balm, the sort of ointment.
Yeah.
It worked wonders on both of us. My shoulder, couple hours later, starts to loosen up. My wife's TMJ starts going away. We weren't high. We weren't walking around like, it was really amazing. There's a gummy for sleep. Listen, I have a hectic job, as you know. I get a lot of people screaming at me, and sometimes I have a hard time falling asleep. I did one of his sleep gummies, Glass House Brand sleep gummies. Put me right out.
And you got a
good sleep.
Good sleep.
And I actually got up early. I remember I went to bed at 10. I actually got up at 5 in the morning. I had to catch a flight. I was fine. I wasn't groggy. So I think there is medical usage here. I'm not saying listen, I'm never going to put a joint in my mouth. Again, I just don't like smoking. You know what I'm saying? I used to smoke a cigar occasionally. I don't even do that. I haven't done that in years.
Yeah.
It's just kind of feels dirty in my lungs, right? But the gummy stuff for sleep, the balm for muscle, feel felt better. So that's my little plug for Glass House Brands. But that being said, we'll have to see exactly what Pam Bondi's out as DOJ chief, but what Todd Blanche, I guess, is the
Yes,
acting,
Todd Blanche.
right? So what exactly how he signs it and how it looks, but that is coming imminently. Like it could be right now. I don't know. But it is coming imminently, and we'll see how that impacts the industry going forward. Maybe you can start listing stocks on the New York Stock Exchange, pot stocks. You know, you don't have to go to Canada.
It would be big for the business.
Right. And again, never a big fan of pot, but I don't know, kind of turned me a little bit. In any event, let's get to the S3 part of this.
Let's go over what we did last week. Some of the picks we
Yes,
recommended.
go for it.
We talked about, we had bearish bet on Abbott Labs. That turned out to be correct. Stock was down 6%.
Oh,
Which is
nice.
a good call.
Good call.
We had a bearish call on Truist, and that turned out to be incorrect. But net, if you had made the same amount, equal bet on each stock using our data, remember, it's not investment advice, but this is what our signal's telling us. You would have made money. You've been up about 4% between the two picks.
Excellent.
We got new picks this week are for Honeywell, which is, the global industrial conglomerate. They do aerospace and automation and performance materials, et cetera. That's reporting Thursday. We have a bearish call on that. And then also West Pharma Services, WST is the ticker, and it's the global leader in injectable drug delivery systems and packaging components. It's been up over 11% over 3 months, and the short interest surged about 79% to 3 million shares. So we think there's a bearish signal here, and then that's reporting for West Pharma. One of the things that got so much play last week was Avis.
What an insane story that is.
Well, it's down 30% today, right? Because
Today.
if you're the company, obviously you got to look at this and say, okay, my stock's up, whatever, 300%. I'm going to do a secondary. It's crazy not to do it. You got to do it. And so I'm sure that's why the stock is off a lot today. But we continue to see that active institutions have added about 16 million shares of Avis over since October, which is a 53% increase in the position. And that built well before this parabolic move, which has pushed the active long positioning past $21 billion.
Is this a short squeeze?
So this is not a meme stock. This is not retail buying has been somewhat involved, but this is much more of a supply demand. This is an incredibly closely held stock by 2 hedge funds. They own most of the float, and they have reportedly done some derivatives contracts to give them even greater exposure than what they have in their cash. What they're holding cash. So what's basically happened is that the folks that write these swaps, they have to buy stock past the return. And so since there's not a lot of stock to short, and there's got like $5 billion or $6 billion worth of shorts in the stock, people want this thing to be in revert. They had a good day today. We were down a lot of money. You just got this closely held stock where the float is really tiny, and they're very hard to get to borrow. And then you have these swap providers actually providing more.
So there wasn't high short interest in this before this, or just it wasn't off the charts.
I mean, $5 billion is not
Nothing,
right. It's not nothing.
but it's not the
And a lot of that, is there's a convert on the company too. So a lot of that short could be, we think about 25% is in the convert, and but it's a fascinating story, right? The thing's been up, parabolic this week, and then off a lot today.
Yeah, that's a wild story.
And then you can see here on the next page, basically Avis runs over short sellers, and you can see on the chart that short interest as a number of shares, um, you can see it's still pretty high, right?
Yeah.
And you can see the price obviously, going up, almost 2.5 times. So shorts are still stuck in. Longs understand the supply demand dynamic, and we'll see who actually gives over time. The next stock is CoreWeave.
CoreWeave's the gift that keeps on giving for risk and return.
We had this one really right.
I know.
We had it really right.
Oh, it rates well.
Yeah, and it ran, and we were right.
Right. Of course. Yes.
Well, no, but I mean, I think we were right in saying this is a very important stock for the market
Right.
sentiment generally.
It's a bellwether for us.
It certainly is, and it's been up 31% since we talked about it on April 8th. The short interest, it's the highest post the IPO lockup, which is about 20.5%. So the fight continues, right?
Yeah.
Between people that think that this is just an anomaly, and others say no, actually, it's a real business model. It's going to survive. So far, survive wins. Next couple things we want to talk about is the software stocks, right? And one of the things that caught our attention is if you look at the index equal weighted return, which is the top line,
Right.
and you look at the short inches of float equally weighted for the S&P software 1500, right? The S&P 1500 software is that as returns went down, you see a higher short interest, but at the very end here, right? You're seeing the return people, there's a little bit of a bounce. You see at the top, there's a little bit of covering.
Yep.
Perhaps technically this is really significant for the software sector, that the bottom's been established and you might see some further short covering here.
Oh, interesting. Now, if that's the case, what are the stocks that benefit? Oracle,
Everyone, certainly the Salesforces
Salesforce.
and the ones that took the brunt of the AI going to replace you narrative,
Oracle, Salesforce.
Salesforce, et cetera.
Yeah.
The SaaS platform, because that's why we picked that
CoreWeave, I guess.
CoreWeave. That's why I picked that S&P 1500 software.
Ah, interesting.
And then we said, well, if we looked, these are the 10 S&P 1500 software names that saw the biggest surge in active institutional ownership during the sector from October to April, during that drawdown. And it's a really good stat. So if you look over here and you see the active long interest as a percentage of float, a lot of these stocks like Life 360 Inc., Dropbox, things that are Teradata, Synopsys, things that have been, trading heavily, right? A lot of turnover. Someone out there has bought up a significant part of the float in the last, call it 6 months. So in all these stocks, some of the floats changed by 34%,
So that
60%, 40%.
That confirms your theory that we've got a bottom, right?
I think so. It's pretty well diversified. Like there's a lot of chunky opportunistic buying,
Interesting.
taking a lot of merchandise being stock, off the market and putting it in their account. It doesn't trade that much.
Okay.
So Battleground stocks this week, we have, we keep talking about AMC.
Oh, God. Yeah, I noticed. So you've been tweeting about that lately.
We have.
Have you gotten any blowback?
We haven't really had something that made us chuckle. I don't mind ones that are.
The stock is on a little bit of a tear, isn't it?
I don't mind the trolling that is humorous.
Yeah, me too. I don't care either.
I don't care.
But it's on a little bit of a tear, isn't it?
It is. The price is bounced here on the bottom. You have
It was going below $1, and then it just popped to $1.80. I was like,
but you can.
By the way,
short interest coming off too, right? At the
interesting. We should talk. We should also point out that this is after a reverse split, 10 for 1. So we're talking about 18 cents in reality, right?
But we look at things that are Battleground. If the long short ratio, if the active long to active short, or active long to short ratio is 0.65, what that means it's tending short, really extreme,
right?
To 3, meaning it's tending much longer. This is This is now moving in a bullish direction. It was as low as 0.65. Now it's 0.69. So there's more long sentiment in the stock. And
Is it retail? Yeah, who's it? Is it retail?
It must be. But the market cap's back up to almost $1 billion. It's $884 million.
Oh God. I mean, there's so much stock out there. So if it's trading out of buckets,
there's a ton. So that's the data we got this week. That was so much fun last week.
Yeah. I mean, to me, it was a career moment for us.
Yeah.
It kind of just put us on the map a little bit, even though we were gaining traction.
So explain to everybody, like, you get 1 million views. Like, how much is that relative to what?
Well, I
Why
mean,
is that so important?
it's important because it means that critical mass is now starting to tune into risk and return. And, they may not all be sticky. They may have just popped in and popped out,
Right.
but they are clicking.
Yes.
And one reason why I think they're clicking is not just that we had a good guess, because we did, but, we don't fuck around here, right? I mean, we are sort of like, we cover it like a baseball game.
It is.
We're not, listen, we both have opinions. We both, listen, I write a lot. I write opinion pieces, but on this show, we provide pretty much the facts, man,
Just the facts.
with some analysis, because you can't help, pure objectivity is bullshit. David Halberstam once said that you got to be fair.
Right.
We are relentlessly fair on this show.
They give it both sides.
Both sides. And, we're both patriots, so we obviously root for the home team. But, if the war goes sideways, the markets are going to go sideways.
Yeah.
And, it's just the way it goes. And we'll cover that as well. Although, again, something is telling me, and I think it all comes back to Jack Devine, there's no way Trump is letting this thing go sideways. Can't. Just can't.
No, not at this point.
No. Yeah. No, he's either going to finish. I think he's going to finish the job in the next 2 weeks, or they come to the table with some reasonable. By the way, one of the problems over there, just so you know, if you're like, Iran, I don't know if there is an Iran government. One of my sources inside the administration said it's like feudalism over there. It's different little,
of course,
moats of pockets of power, and who knows who's running the show.
Yeah.
I don't know who has the Ayatollah's account, which warlord, you know what I'm saying? And, either way, societies cannot function with warlord. I mean, that is not a long-term recipe for success, having warlords.
Yeah, one would think.
Right. I mean, they might be able to survive long-term. It's not our job to nation build either. And I think Trump made that clear. But, usually when that happens, you got warlords, and you got people that hate some of the warlords, like the Kurds. I mean, who knows what could happen? This is, but anyway, that some of this is out of our control. What is in our control is, like, we want shipping to be open. We're not going to let a bunch of miscreants blow up the world. Trump, I don't think people sort of understand that there's never been a time when if you had a peace dividend, it hasn't added to the economy. Right. I mean, that region will just take off.
If it would be, so many energy deals would be done if people thought that there was that it was a safer place.
Yes.
You get a much longer term investment.
And not only that, you get, like, the whole Arab world now is sort of aligned against Iran. I mean, if this thing kind of turns out net positive, it is a lot of good here.
Exactly.
Again, but it's a trading market. So remember, between now and the good stuff, there's a lot of shit in between. And that's why kind of keep an eye on this show. We're going to give you what the data is saying and where the data is projecting things going. And the data right now is a little bit inconclusive, right? Short term.
Well, we didn't give them a real macro call. The one thing that we did highlight today was software stocks, and we thought the price action versus the short covering that we've seen in the sector is maybe saying that there's a bottom here, and that the bottom has been established, and things need to reform as they recover. But a lot of these stocks have recovered somewhat.
Oracle recovered?
It's gone okay.
I think it's more or less stabilized, right?
That's my point. Stabilized.
I mean, we're not in, well, it's doing pretty good. It's back to where it was about a year ago almost.
So, that's
Aside from that wicked jump, as you know, or that was okay. That's not a year. That's year to date. Let's do 1 year. It's above where it was a year ago. So
think about around the journey that stock's been on.
it was just nuts.
It's just nuts.
By the way, tomorrow, a little bit of housekeeping here. Warner Brothers Discovery has a board meeting. Might get some stuff on the merger. It needs regulatory approval. The purchase of Warner Bros. Discovery by Paramount Skydance. Not quite a done deal, but it looks like the Trump administration is going to approve that. Despite Hollywood going nuts. What I don't get about Hollywood is why they opine about shit they know nothing about, these actors. Like they're not great at econ. They're definitely not good at finance. And they're good. They're not good at any of that stuff. And yet I'm listening to Mark Ruffalo and this one saying, "Oh, let's protest Paramount Skydance buying Warner Brothers Discovery because it's going to lead to consolidation in the industry." And I'm saying, well, they were going to sell either to them or Netflix, which is a streaming service, which really doesn't want to have a theatrical window like where you can go to the movies.
Right.
Isn't this a better deal? And by the way, not for anything, you think Warner Bros. Discovery, David Zaslav did a good job getting that place together. He does not get enough credit for that because people are so focused on the $800 million he's going to walk away with this.
I think he's going to get a lot of credit when he closes.
Well, he 800. He's like not well liked in Hollywood because of this, because he sold this company to Ellison, and Ellison is close. David and Larry Ellison, Oracle co-founder, close to Trump. But he had no choice. He fixed the place up as best as he could do to get it sold. They have good box office these days. They have a really good streaming service, HBO Max. The studio's doing well. He got rid of some debt, and now he sold it. And this place was not going anywhere fast alone.
Yeah,
I mean, it wasn't. It would have been a melting ice cube. And I don't think that's the kind of business that it is. I mean, media is the same way. It's kind of a melting ice cube in many ways.
Well, we talked about it a lot on this show, is that the reason why we're getting so many views is that it's an unusual format.
Yeah, media is bifurcated. Striated.
Totally bifurcated. So it's an unusual format. You have all this technical data about market positioning, market intelligence, and they combine that with your headlines.
And it's a format that, we're going to unpack it.
Yeah.
One thing about TV, and like I said, I love my job. I love Fox Business. I love Fox News. There are 3-minute segments.
Well, that's great.
You know what I'm saying?
There's a real art to doing that.
Yes. Oh, yeah. Very hard.
CNBC, whatever. That is haiku. You got there's something in like 3 minutes or 4 minutes. That is very difficult to do, and do it effectively and communicate.
it.
Yeah, it's not easy.
No, but it's hard to get actionable information in 3 minutes because some of the stuff is nuanced.
100%. Well, sure.
And you have to unpack it, and it becomes difficult. So that's one thing great about this format. No one's rushing us off the air. Except for dinner and martinis occasionally.
Well, that's a good reason.
Yeah, I mean, that is a good reason. So that's where we are this week. You want to wrap it up here?
Yeah, let's wrap it up.
Okay. Let's just put a couple of fine points. Software, stocks, you think there's a bottom here. Data's suggesting that.
Technically forming a bottom, yes.
Kevin Warsh looks like he's getting in there.
Yep.
Okay, but this thing could go sideways on that because you never know. It's a lot of big egos, including a guy that sits in the White House.
Yep.
Pot Inc. might be a net positive. Look for the headlines. They could be coming out soon on whether the Justice Department codifies the executive order that makes it a Schedule 3 drug as opposed to a Schedule 1 like heroin. With that, I'm going to close out. This is Charlie Gasparino from Fox Business, the New York Post, with my partner in crime, the granddaddy of data, the founder, the chairman of S3 Partners, Bob Sloan. See you next week.